welcome to the Morningstar series, Ask the Expert. I'm Emma Wall and I'm joined today by Morningstar's Jonathan Miller, Head of Manager Research for UK. Hi, Jonathan.
Hi, Emma.
So Brexit has actually happened, or will do rather. We've voted for it and we've seen pretty instantaneously how markets have reacted. But what about how retail investors have reacted?
Sure, I mean, we can look at fund flows as a way of seeing how investors, what they've been doing with their money. And if we look at what's happened year to date, we're not at the end of June yet, so this is from the start of the year to the end of May. Investors have been leaving UK equities, especially, and European equities. Now, if we take a look back though, how did the year start? We had a lot of negative news, bad first few months, bad 6 weeks, but actually by the end of Q1, markets were back to where they were on 31st of December. So if we take how people are emotional and react, you can probably imagine the June numbers seeing people heading for the doors. We don't necessarily think that's the best thing to be doing there.
Of course, this is a very emotive reaction to negative sentiment, and that is often what drives investors, but it's not always the correct strategy, is it? People should be encouraged to take a longer term view.
Definitely, and when we look at the news, this weekend I was absorbing all the news and you see things like financial Armageddon, panic in markets, and that doesn't help investors, nor does the fact just this lunchtime I was looking at probably the most well-read website here in the UK for news, and it recapped what happened on Friday. It said the markets opened 8% down and finished the day 3.2% down. It should have carried on saying the FTSE 100 is also up 2.4% for the week. That sort of thing gets ignored. So investors should think about their long-term plans, and here at Morningstar, this is what we believe is important to achieve your long-term goals.
So, for example, if I wanted to take exposure to UK equities and I had long-term conviction in that sector, I shouldn't just give up on it in my pension portfolio because of a couple of bad months.
Of course not. And we look at a gold-rated fund by Morningstar, a fund with a Morningstar Gold Analyst rating. That's the Lindsell Train UK Equity Fund, and their manager, said if things like Greece happening in the last couple of years, China devaluing their currencies, these are things to ignore. When you look at the long-term graphs, these are just minor blips. So people saving on a monthly basis, that's the best way to erode or the compounding effect is important to be able to smooth out these volatile periods. And actually, when you invest like that, you should embrace these volatile periods. You can get more for your money at lower prices for the funds, and that sets you on a good journey for the long term.
Jonathan, thank you very much.
Thank you.
This is Emma Wall from Morningstar. Thank you for watching.